Income Tax 2020, Practice Problem 1, Presentation 26, Other Itemized Deductions, Gambling Losses. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along. However, I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it or any other tax software, it may be a good tool to practice with. We're going to be continuing on with our comprehensive practice problem number 1. In a prior section, we entered the information for our income, getting down to the line item 81,030 taxable income. Then we concentrated in on our above the line deductions, otherwise known as adjustments to income, to get to that 15,600. AGI, adjusted gross income, 65,430. Now we're concentrating in on the itemized deductions, which are now greater than the standard deduction. We have entered most of those in place now. Now we're looking to the other itemized deductions for the gambling losses. So we have up top, this is what we have thus far. We went through the medical expenses, we went through the taxes, we went through the interest paid, the gifts to charity, and now we're looking at basically gambling losses, and that's going to go into the other items down below. Now, gambling losses are not going to be things that you see all the time, and they typically will come up when there's going to be some kind of gambling winning. So in a prior presentation, we had the 1099G that we had to input into the gambling winnings side of things. And when that takes place, people will typically ask the question, or you should ask the question, should there be any gambling losses that can be taken against the winnings? And remember the traditional rule that you have with regards to whether something is deductible or not is if it's something that was used in order to generate the income, then you would think it would be deductible. You should be taxed on an income tax basis at net income, not on the gross income. So you would think then, in order to generate the gambling winnings, you had to incur gambling losses, and therefore you should be able to deduct them. But due to the fact that we're not professional gamblers, it's kind of like a hobby type of thing, you know, for most people, that would mean that you don't really usually get the gambling losses. But you may get the gambling losses over here on the itemized deductions if you are itemizing, but they're going to be limited up to the point of gambling winnings. And again, they're itemized. So therefore, if someone likes to gamble and they want to say, well, should I collect the losses? Then it's really kind of dependent on whether or not they're going to be itemizing or not, right? Because they're going to have some winnings. But if they're not close to itemizing, unless they had a large amount of winnings that would push them over to itemizing just due to gambling losses, it may not be worth their while to gather the gambling losses. So for most people that don't itemize, probably not. But if you do itemize and you're taking a trip or vacation or whatnot and you're deciding to do some gambling, then yeah, you might want to keep the losses to some degree just in case you win something, because you may be able to deduct the losses up to the point of the winnings if you have the supporting documentation for it. So if you win over a certain amount, you might get something like a W-2G, which we entered last time. That was in our other income up top. We entered that in our income section. It flowed in through the Schedule 1, Part 1, and then we had the other items, including the gambling winning on line 8. So that was for $600, so we're going to be limited to that $600. Now they are itemizing. So if we don't have the gambling losses, we're going to ask. We're going to say, hey, look, you got gambling winnings. We had to record $600 of income. If you gambled for any significant amount of time, you probably had losses, probably more than that. So you may be able to take the losses up to that, but you would need the supporting documentation for that. So if they have the supporting documentation, then we're going to say, all right, let's go over to our data input. And I'm going to assume the gambling losses were greater than the gambling winnings. So I'm going to go to the gambling and I'm going to take the losses. So we're going to add the losses. And then this is something that we're not going to have the documentation for in terms of a formal documentation. In other words, if the gambling winnings are over a certain threshold, then you'll probably get a formal documentation for the income side of things, just like the IRS does anytime there's kind of a lot of income that's trading hands, right? The IRS is going to pressure, let's say, the casino or whoever's paying to tell the IRS that they paid you so that they can then charge you the income on it. So that will have the formal documentation for. If you don't have the formal documentation and you won like $5 in the slot machine or something like that, yeah, you should report it. But you probably don't have the you don't have the documentation for it. You may not get that $5 on the winning side of things. But obviously, if you have the W-2G, then you got it reported, because that's them sending it to the IRS. The IRS is basically saying that's significant enough that I want to double check to make sure that this is being reported. That's gone to the IRS. The losses, however, are not going to the IRS. There's no formal documentation. You would need to collect and make sure you're saving the documentation for the losses. So that would need to be the supporting documentation. Let's say the losses added up to like 7,000 in losses that we had. So losses are greater than the winnings of the 600. So if I then go back on over to the forms, we're going to say now that we're going to the Schedule A, and we have the other itemized deductions. You can see we have the gambling losses. It's being limited to that 600 to the amount of the gambling winnings. So that's going to add up. We got the total then on the itemized deductions at the $30,562. That amount being greater than the standard deduction, so that's going to be pulled over to the 1040. So we got the 1040. It's being pulled over right there, $30,562. So what we have thus far is the income from prior, no change to the income, $81,030. Above the line deductions, $15,600. The AGI, adjusted gross income, $65,430. We now have the itemized deductions at the $30,562, bringing the taxable income down to $34,868. That then is what we're going to calculate the tax on, depending on the software to do so generally. Tax software calculating $3,634 on it. Then we have the withholdings from the W-2s that were paid in, $8,000, to get to the amount of overpayment at this time, $4,366.